So the next session will talk about how family offices manage both personal and financial wealth. Giving an overview and an analysis will be Ty Murphy. Please would you give a warm hand to Ty Murphy. Thank you.
Good afternoon, ladies and gentlemen. My name is Ty Murphy, and this is an overview of the family office space. First question would be, what is a family office? Well, a family office is an organisation dedicated to serving wealthy individuals or families on a diverse range of financial, estate, tax, accounting and personal family needs. The modern concept of the family office was developed in the 19th century by J.P. Morgan, pictured here, and founded the House of Morgan in 1838 to manage the family's wealth and assets. Over 40 years later, the Rockefellers founded a family office that's still in existence today and provides a multitude of services to other wealthy families. There's been a significant increase in the number of family offices globally over the last 10 years. EY, Ernst Young, estimate that there are over 10,000 single family offices around the world, and that's a 10-fold increase from 2008. So here we go, types of family offices. As you can see, we've got 4 different categories. The first one would be the single family office. So the best way to describe that is a separate legal entity serving one family only. There are a number of reasons for setting up a single family office. For instance, the retirement of the older generation, more diversified investments, widening of the asset structure, privacy concerns and legal risks. Then we have a multi-family office, an MFO, and a multi-family office manages the financial affairs of multiple families who are not necessarily connected to each other. As with an SFO, an MFO might also manage the fiduciary, trust and estate business of multi-families as well as their investments. Now we've got an embedded family office, which is not as important as a single or multi-family office, but still the same, it's worth mentioning. So an EFO is usually an informal structure that exists within a business owned by an individual or family. The family considers private assets as part of the family business and therefore allocates private wealth management to trusted and loyal employees of the family business. Virtual family office is much the same. Well, a virtual family office, a VFO, is a lean single family office that uses a high level of outsourcing to keep the staff as low cost and flexible as possible. So this is an obvious one. Why set up a family office? So as we can see, we've got some bullet points here. One of the great advantages of a family office is the ability to create a customized investment solution for current and future generations. No, not that one, Simon. Next one. However, many reasons for setting up a family office. So firstly, privacy and confidentiality. For many families, the most important aspect of handling their private wealth is privacy and the highest possible level of confidentiality. Now, we saw the Hinduja family were here earlier, the wealthiest family in the UK, so far as I'm aware, and that's something that's very, very important to the Hinduja family. Now we've got governance and management structure. A family office can provide government and management structure that can deal with the complexities of a family's wealth transparently, helping the family to avoid future conflicts. Then we've got separation. Family offices allow for separation or at least a distinction between the family business and the family's wealth or surplus holdings. Risk management. Family offices allow for operational consolidation of risk, performance management and reporting. This helps the advisor and principals to make more effective decisions to meet the family's investment objectives. Alignment of interests. A family office structure also ensures that there's a better alignment of interest between the financial advisors and the family. Potential higher returns. Through the centralization and professionalization of asset management activities, family offices may also be likely to achieve higher returns or lower risk from their investment decisions. Centralization of other services. Family offices may also coordinate other professional services, including philanthropy, tax and estate planning, family governance, communication and education to meet the family's missions and goals. Focal point for the family. In cases where the main family business has been sold, a family can offer a new focal point of identification for the family members. For example, when the family office manages the philanthropic activities of the family. Family office, trusted advisor. So that's how I would describe myself. But as you can see, family office trusted advisor comes in and provides many, many services. So family office trusted advisor can advise on many issues. This is a partial list of advisor expertise. A sincere and trusted advisor will always put their clients' interests ahead of their own. The advisor will give their high net worth clients personalised attention and provide impartial advice and guidance on a range of issues. The family office advisor may also act as a trusted confidant. And this can be one of the most important functions of the family office, as well as the family office advisor sometimes takes on the role as a guardian. Okay, so that's quite simple. UK regulation. I mean, this was for a predominantly Indian audience. Okay. All right, so the UK regulates certain activities carried out in relation to specified investments, and as a rule, a person requires approval by the UK regulated financial conduct authority before they can carry out regulated activities. If a family office platform falls within the scope of regulation, it would need to apply to the UK regulator and receive approval. The application process for a family office platform takes 4 to 6 weeks to prepare the application. Once a completed application has been submitted, the regulator then takes 6 months to determine the application, up to 6 months. Family offices in India. So this following is from a report by Camden Wealth, Native Voice Report 2018 on the Indian family office space. As you can see, we've got 4 main points here. The family office space is starting to take root in India. The concept of a family office, including what a family office is, why one is established, how one can be structured, what services and benefits it can provide, is still relatively new in India. Average family wealth in US dollars is 645 million. Average family office, AUM, assets under management of 318 million. The average assets under management of the family office were represented within the Camden Wealth and Advice report. And the average net worth of the family, as I said, 645 million. Nearly half of the family offices, nearly half utilise family office services. Of the 78 families who took part in the Camden Wealth and Advice report in India, and nearly half, 49%, utilise family office services. These services are most often come in the form of hybrid family offices, which are family office services that are embedded in the family business. Further professionalising a family's office business structure and the core reason for setting up a family office. The core reason for setting up a family office in India is to add a layer of professionalism to the family business and investment structure to help successful transfer between wealth generations and to embark on co-investing opportunities. We carry on. So family offices have a myriad of responsibilities. The responsibilities the family offices allocate to the family offices vary considerably, from wealth management to family related. At present, the most common are 1, to act as an investment management service, 2, to support new family business, and 3, to provide tax and legal services. India remains the focus for family office investment. 99% of families represented within the research for the Camden and Edelweiss report invest in India. Outside of this, 14% also invest in North America, 11% in Europe, 10% in the Asia Pacific, 7% in the Middle East, and 5% in Africa. Succession planning needs to remain in sharp focus. In preparation for the large-scale generational translation that has already begun to take place globally, 62% of families in India now have some form of succession plan in place. However, only 19% of these are written and formally agreed. The remainder are either simply verbally agreed, 14%, or formally written, 29%, suggest that succession planning needs to remain in sharp focus. The next generation is coming to the fold. Over half, 15% of those surveyed in the report that the next generation of family members currently hold family office wealth management roles, while a fifth, 20%, sit on the board. Roughly 2/3, 64%, they have a strong influence over the family business. Nearly all families give philanthropically. The vast majority, 95% of the families give philanthropically. The most common areas to give are education, children, youth, and poverty alleviation. How the family wealth is split across the holdings according to the Edelweiss Camden Wealth Report. The average level of wealth of families studied within the report stands at 645 million. That's compared to an average of 1.1 billion for family office holders globally, according to the UBS Camden Wealth Report, which is a different report from the Camden Edelweiss Report. In terms of where family wealth in India resides across individual assets, an average of 42% sit in family operating business, 31% in real estate, 22% in financial instruments, and 5% in other assets, including jewellery, art, yachts, etc. Okay, so let's finish this a little bit off. Now, more than 51% of families represented in this research have retained a complete 100% stake in their operating business, while 38% hold a majority stake, 3% a minority stake with controlling rights, and 8% have sold their operating business. Now, this is a chart again from the Camden Wealth. So the most common industries by wealthy Indian family businesses operate in our manufacturing, 26%, finance and insurance, 13%, real estate, rental, leasing, 10%, retail trade, 7%, and agriculture, forestry, and aquaculture, 7%. The least common industries to operate are logistics, media and publishing, management of companies and enterprise, information and communications, and healthcare. Now, some reading material. Family Office Magazine, okay? A number of publications out there. Firstly, Family Office Magazine is all about the business of wealth within the family office space. So over 500 guest writers. Who's who within the family office, wealth management, private banking sector are contributors, and so the media kit is well worth a look. The publication is a quarterly publication as distributed within the family office and wealth management space. Family Office Magazine also holds regular events in London and Monaco. They've got 160 media partnerships and events that they sponsor worldwide. Art and Museum Magazine, as you can see, is all about the business of wealth, the business of art, sorry. And it's a supplement for Family Office Magazine. Annual subscription is £99. Please make a note of the website. Another good publication. So Camden Wealth also publish a quarterly magazine that contains aspects of finance, governance, next generation, and so on. Not as widely distributed as Family Office Magazine. The subscription is £125 a year. You were supposed to photograph that, Simon. That was the one. Actually, will I go back to the other one as well? No? I'll send that over to Richard. I think he'd like that. Have you got it? Okay. Right, family office news. Okay, there's many sources out there, but very few dedicated entirely to family offices. So Family Office Magazine offers a free news service, no sign-up, no membership fees. Just visit the website. So if you like, make a note of that URL, familyofficemag.com. More reading material. Now, these are two of the reports that we've just mentioned. And the Camden Wealth, UBS, great reports, great information. Edelweiss Camden, another great report, but basically dedicated to the Indian family office space. Also recommends City Private Bank reports and Knight Frank reports. So these are the ones that we would recommend. However, the Camden Wealth reports are not cheap at £1,700, about $2,000 each. Happy Brexit Day. Okay, yeah, I know. all right, I got it. Okay, so how will Brexit affect the family office space? Well, that's a good question. Very good question. Okay, since the Brexit referendum in 2016, London has maintained its position as the world's premier centre for financial services, ahead of New York, Hong Kong, and Singapore. It's surprising, isn't it? For those who don't know. Not that lot over on the right, they know it all. Anyway, so family offices provide a broad range of financial services and non-financial services in the UK. Many of these services in the UK operate outside the scope of European regulation and will remain to do so after Brexit, assuming it goes through. And that's very, very important to understand. If Brexit does happen and the UK does exit the EU, the UK will still be an attractive place for European families, the other way around, European families coming to the UK, to escape European regulation. So European families who wish to base some or all of their operations outside of Europe, therefore benefiting from any regulatory divergence that the UK makes post-Brexit, assuming it happens. So Brexit or not, the UK is still a good place to do business. Now, here we go. You're looking in the room, this is really not applicable to everyone. Who doesn't know about this? Okay, everyone knows about this. All right, okay, so it's quite simple. Now, why invest in Ireland? So who doesn't know about that? Okay, so we've got a colleague here with us, Richard. Richard, put your hand up, say hello. Richard's over here. So Richard's passed me these notes earlier after we had a good chat. So residency in Ireland, or residing in citizenship in Ireland. So the Irish RCBI works for families, particularly from India. You're out of luck, Richard. There's not a lot of them left here today. They all left. Wholly refundable and investment of €1 million. Is that correct, Richard? And what's the name of the company again? Could you show that out? The IDLF. So the former Taoiseach Prime Minister of Ireland is the chairman. Okay. Is that a good thing or a bad thing? I don't know, but Richard is there if anyone wants to talk to him. As everybody knows, does anyone want to hear about the TR1 now? Oh, you do? All right, putting me to the trouble. Okay. All right, so I'll keep it very short. So residency by investment in the UK. So we've got the Tier 1 Investor Visa Programme. 2 million. That's it. Let's keep it simple. Everybody can read themselves. Allows individual investors and their family to obtain residency permits and British citizenship by investment. As you can see, they're Tier 1 visas. For full information, look at the visa. The Tier 1 entrepreneurial visas are 50k, but they can be problematic. Okay, now for something totally different. It's not Brexit. Anyone know about this? Not you, Pandora. I know you do. Okay, so all right, so increasing competition in the wealth management industry puts emphasis on a more holistic and wealth management model, which has become a key driver and motivation for incorporating art-related investments into the family office portfolio. So here is an interesting investment that was highlighted by a recent Bloomberg article, for one. So family offices are now looking at third-party guarantees with the main art auction houses. So if we look at the figures above, so I'll clarify those in a sec. So the sale of the Leonardo da Vinci Salvador Mundi sold for 450 million, world record. That was last year. It highlighted the profits that can be achieved via the third-party auction guarantees. So, of course, what is third-party for those who don't know? The process is quite simple. So what is a third-party guarantee? Well, the process is very simple. To minimise the risk of an artwork not selling at auction, the large auction houses negotiate a guaranteed minimum price with an external third party or an investor. This basically guarantees that the artwork will not go unsold. In return, if the art sells for more than the guaranteed minimum, the guarantor can receive over 30% of whatever the artwork sold above the minimum guarantee. The biggest profit for a guarantor was the auction of the Leonardo da Vinci Salvador Mundi, as you can see here. Sold at Christie's auction house, as I said. So the artwork had a third-party guarantee of 100 million from an investor. The painting sold for 450 million, as we can see. Given the guarantor for this particular work profit of 150 million. Do you want to photograph that one, Simon? I got to send that to someone as well, please. All right, so the art auction guarantees do not have to be mega millions. Right? It can be from 1 million upwards. And for anyone who wants more information, make a note of the domain, domos.uk. And before I go, I'd like to thank Craig and his team and our wonderful introducer here, and Pandora and Simon for all his help today. And Richard, thank you as well. Thank you very much, ladies and gentlemen. If you want any more information on the family office space, make a note of this email address. That is a domain. .agency. Thank you very much, ladies and gentlemen.